If you've been following business news lately, you've probably noticed something unusual. Companies are reporting healthy profits while still cutting costs. Hiring has slowed in some industries, even though unemployment remains relatively low. Businesses are investing billions in artificial intelligence while also becoming more cautious about spending. At first glance, these trends seem contradictory, but they're all connected by one reality. We're entering a new business economy. It's an economy that's being shaped by technology, higher borrowing costs, changing consumer behavior, and a completely different approach to growth. Understanding how this new economy works helps explain why companies are making decisions that would have seemed surprising just a few years ago. For much of the past decade, businesses operated in a very different environment. Interest rates were historically low. Borrowing money was relatively inexpensive. Companies expanded aggressively, hired rapidly, and invested heavily in new projects because financing those investments was affordable. Growth became the primary objective. The faster a company expanded, the more attention it often received from investors. Today, that environment has changed. Borrowing costs are significantly higher than they were just a few years ago. That means every investment receives much closer scrutiny. Businesses are no longer asking only whether a project will increase revenue. They're asking whether it will generate strong long-term returns. This shift has encouraged companies to become much more disciplined with spending. Another major feature of the new business economy is productivity. Instead of simply hiring more employees whenever demand increases, businesses are first looking for ways to accomplish more with existing teams. Artificial intelligence plays a major role here. Companies are using AI to summarize reports, automate repetitive administrative work, improve customer service, analyze data, and assist employees with routine tasks. The goal isn't simply reducing labor costs. It's allowing skilled employees to spend more time on work that requires judgment, creativity, and problem-solving. Businesses that improve productivity can continue growing without increasing expenses at the same pace. Customer expectations are changing as well. Consumers expect businesses to provide fast service, seamless digital experiences, transparent communication, and personalized recommendations. People compare experiences across industries. If ordering groceries online is simple, they expect booking travel or applying for financial services to be equally convenient. Companies that fail to meet those expectations risk losing customers to competitors offering smoother experiences. As a result, customer experience has become a major area of investment. Supply chains are another important part of this new economy. Recent global disruptions demonstrated that efficiency alone isn't enough. Many companies discovered that depending heavily on one supplier or one manufacturing region created significant risks. Businesses are now diversifying suppliers, strengthening regional production, and improving inventory management. Although these changes sometimes increase short-term costs, they improve long-term stability. Resilience has become just as valuable as efficiency. Financial discipline is becoming more important too. Investors are paying closer attention to profitability, cash flow, and operational performance rather than focusing only on revenue growth. Companies are responding by carefully prioritizing investments. Projects that strengthen long-term competitiveness receive greater attention. Less essential initiatives are delayed or canceled. This disciplined approach helps businesses remain financially flexible during uncertain periods. Technology continues reshaping every industry. Cloud computing allows businesses to access advanced software without major infrastructure investments. Automation improves operational efficiency. Advanced analytics provide better insights into customer behavior. Cybersecurity has become a core business priority as digital operations continue expanding. Technology is no longer viewed simply as a support function. It's becoming central to how businesses compete. Workforce expectations are evolving alongside these changes. Employees increasingly value opportunities to learn new skills, use modern technology, and continue developing professionally. Businesses recognize that investing in employee training improves adaptability and strengthens long-term performance. Rather than viewing learning as an occasional event, Many organizations now make continuous development part of everyday work. Another defining characteristic of the new business economy is operational simplicity. As organizations grow, they naturally become more complex, more products, more meetings, more software, more reporting. Eventually, complexity begins reducing efficiency. Many businesses are simplifying operations by eliminating duplicate work, reducing unnecessary approval processes, and focusing resources on their highest value activities. Simpler businesses often make decisions faster and respond more effectively to changing market conditions. Innovation itself is changing. Companies still invest heavily in research and development, but they're becoming more selective. Instead of launching numerous unrelated projects, businesses increasingly concentrate on solving meaningful customer problems. They test ideas earlier, collect feedback more frequently, improve continuously. This approach often produces stronger long-term results than pursuing innovation for its own sake. Leadership is changing too. Today's executives must manage technological transformation, economic uncertainty, workforce development, cybersecurity, and customer expectations simultaneously. Strong leaders encourage flexibility, continuous learning, and thoughtful decision-making. Rather than assuming today's strategy will remain effective for years, they're building organizations capable of adapting whenever conditions change. Perhaps the most important feature of the new business economy is adaptability. Markets evolve faster than they once did. Technology improves rapidly. Consumer preferences shift continuously. Businesses can no longer assume stability. Instead, they're creating systems designed to respond quickly when new opportunities or challenges emerge. Adaptability has become one of the strongest competitive advantages available. This explains why companies sometimes appear cautious while continuing to invest aggressively in specific areas. They're reducing spending that creates little long-term value while increasing investment in technologies, infrastructure, employee development, and operational improvements that strengthen future competitiveness. It's a more balanced approach than many businesses followed in the past. Looking ahead, these trends are likely to continue shaping business decisions. Artificial intelligence will become more integrated into daily operations. Automation will improve productivity across more industries. Supply chains will continue evolving. Customer expectations will keep rising. Financial discipline will remain important. Businesses that prepare for these realities today will likely be better positioned for tomorrow. The new business economy isn't defined by one technology or one economic event. It's defined by a different way of thinking. Companies are focusing less on becoming the biggest and more on becoming the most efficient. They're balancing growth with profitability, innovation with discipline, technology with human expertise, resilience with flexibility. In many ways, that's what makes this economy different from the one businesses operated in just a few years ago. Success is no longer measured simply by how quickly a company grows. It's measured by how well it can adapt, create value, and remain strong in a world that's changing faster than ever before. And that's why understanding the new business economy has become so important, not just for business leaders, but for anyone trying to understand where the future of business is headed.